Hello, everyone. Welcome to another installment of the Burns & Wilcox educational webinar series discussing topics that are important to insurance professionals around the world. My name is Bill Gatewood, Senior Vice President at Burns & Wilcox, and I lead our personal insurance practice. And today we are discussing current market conditions in personal lines with a particular focus on the private client segment. We still have some people rolling in, so I will tell you that this is an interactive session, and if you have questions for our very esteemed panel, you can type them in at the bottom of your screen. I'll be watching them as we go along, and we'll use some questions during the broadcast, as well as we'll get to as many as we can at the end as well. So please feel free to submit any questions. We decided to take a little different approach with today's webinar. Rather than providing you, the audience, with another discussion about all of the factors contributing to today's hard market, we thought it might be a little refreshing to talk about strategies around how agents and brokers can be successful in today's market, and also talk about best practices around communicating these difficult messages to your clients. And in order to do that, I need a very strong panel of experts, which we have today that I would like to introduce to you. If you've been on our webinar series in the past, you probably recognize Heather Posner. Heather is an Assistant Vice President at Burns & Wilcox and National Product Director for our private client practice. She's been employed at Burns & Wilcox for a little over 6 years, and prior to that, she has extensive experience in the private client segment, working with multiple admitted high net worth carriers. Another familiar face on our webinar is Sarah Chandonnet. Sarah is the Director of Underwriting in our private client practice and has been with Burns & Wilcox for almost 9 years. And in her role, Sarah works on the front lines with agents, retail agents, and insurance carriers, and has become very skilled at designing creative solutions for private client agents and their clients. And I'm really pleased to introduce Diane Delaney, who is joining us today. Diane is the Executive Director of the Private Risk Management Association, an industry-led not-for-profit organization dedicated to educating and serving the private client marketplace. Diane also has a very impressive background in private client insurance, working in areas of training and development, along with sales and marketing expertise. And I would like to welcome all three of you to the panel today.
Thank you, Bill.
Oh, all right. You're speaking. That's good, because we got a lot of time to fill today. So, Diane, I want to start with you. Burns & Wilcox has had a long relationship with the Private Risk Management Association, which I'm going to refer to as PRMA from here on out, so I don't trip over that. We've had a long-standing relationship with PRMA. I have been honored to serve on the board for many years and been on the executive board for the last couple of years, but there's probably some people out in the audience that still aren't familiar with PRMA. Could you give us a quick overview of the PRMA organization and mission?
Sure, Bill. As you mentioned before, PRMA is a nonprofit membership-driven organization. Right now, our membership base is right around 4,800 members, which consists of risk management professionals in our space who are responsible for servicing high net worth clients. And the goal of the organization is to bring together anyone who has an interest in this space, whether it be an independent insurance agent, so a lot of brokers, high net worth insurance carriers, wholesalers, and service providers. And it is meant to be this platform and location that all of these members come together first and foremost for education. And especially now in what we're seeing happening in the industry, it's trying to bring together subject matter experts who have expertise in this space that could provide guidance, information, just training on how we are dealing with what's in front of us. But it's not even just focused on what's happening in our market, it's all different aspects of protecting a high net worth individual's life that makes up the association.
That's great, and you do it very, very well, and we're very happy that you joined the organization last year.
Love running it.
Yeah, and I'm sure we'll talk a little bit more about PRMA and some of the opportunities that are presented to the marketplace a little bit later. I know at the onset, I said we weren't going to talk a lot about all of the factors contributing to today's market, but I think I'd be a little negligent if I didn't give some level of update as to what is going on in today's marketplace, and then have you all sort of comment on that. We all know that the P&C industry had a very poor first quarter. And as 2023 continues to develop, the Insurance Information Institute is now predicting that the P&C market will turn in another unprofitable year in 2023. Personal lines is a key driver in those losses, as cat activity in the first half of 2023 is as bad as it's been in decades. And speaking of that, the National Oceanic and Atmospheric Administration last week upgraded their prediction for the 2023 hurricane season. They've gone from an average season to an above average season. And of course, the big news in the last few days that we've all seen is the tragic wildfires in Hawaii. And in addition to the horrific loss of life, expected losses from these fires is in ranges of $8 to $10 billion, with insured losses between $1 and $3 billion. So things are not getting better. And I bring these points up because the P&C industry is now not predicted to turn a profit again until sometime in 2025. And there are a lot of ifs that have to happen for that to occur, regarding all of the natural catastrophes that we've seen. So it's really important that we understand that this market's going to be here for a while. Things are not going to return back to the way they were anytime soon. And so it's important for us as risk managers and dealing with affluent clientele to figure out how we navigate to successful outcomes for our clients. And so, Dan, let me start with you. I know that in your role at PRMA as the executive director, you receive a lot of phone calls from PRMA members, a lot of retail agents who are struggling in this marketplace. What would you say would be some of the most common questions and frustrations that you hear from private client agents about today's market?
Sure, and I do feel in today's times, it's almost as if we're a therapist here. And none of these kind of challenges that I'm about to call out are probably going to be shocking, but I say them so that all of you on the line understand that you're not alone. But countrywide, even internationally, what I do hear is obviously access to markets are so far and few in between that writing personal lines business is getting extremely difficult. And then, of course, it's all the price increases and trying to keep up with fielding the client phone calls when they're getting their renewals and seeing even how much the coverage A or their premiums are on the home has been a huge challenge in this space.
Sarah, you are in a position to work with retail agents and brokers who are in the midst of trying to find specific solutions for specific clientele. What are some of the frustrations and challenges that you hear from agents trying to place affluent business?
Yeah, so from producers and account managers specifically, we're having a really hard time strategically discussing coverage limits. So these folks have relied on admitted markets for a long time. They're used to, 20% coverage B, 50 to 80% coverage C, personal property. They're used to percentages defaulting every year for renewals for their clients and just offering it. I have an example of an account that just came across my desk this week, and the client, or the agent rather, was asking for $2 million in other structures. Did an aerial view of the property and noticed there was no other structures on the property. So called the agent and said, hey, what are we asking for? Was there a new construction? Is there something I'm missing? And they said, oh my gosh, I'm going to call the client. There is no new construction. This is just what we've always had. So educating the agents on discussing with the client, what are we intending to cover? It's a topic we're seeing left and right, and it's really, really important with this market right now, how hard it is. We need to make sure that we're asking our carriers for the right thing. So strategy on TIV limits, making sure we're asking for what the client has and what we're intending to cover. And we're not looking to overinsure every property we're writing. We're looking to make sure that we are methodically writing business. So discussing coverage limits is definitely a hot topic that we've had to have quite a bit with our agents. Another thing that I'm seeing a lot of or hearing a lot of is wholesalers ask a lot of questions. And I would be concerned if a wholesaler isn't asking you questions. We want to make sure we have the strongest submission out to market. So we're going to ask you questions. We're going to ask about the client. We're going to ask additional details about the loss history. We're going to ask if the client takes risk mitigation seriously and get some details so that we can present that to our markets and make sure we get the best terms for you possible. So yes, it might be a little bit back and forth and we might be asking a lot, but again, I would be concerned if someone isn't asking because that would potentially mean the strongest submission isn't going to market.
That's a really good point, Sarah. I think that we've had lots of conversation internally, externally, and conferences that we can't do business today the way we've done business for the last decade, right? It's a new marketplace, and so providing a little more detail and having a little more conversation up front is one of those things that's occurring. So it's a really good point that you called out there. I appreciate that. Heather, you talk to a lot of agents as well, but in your position, you speak with a lot of senior executives at very large retail organizations. As you talk to the leaders of large retail organizations, do they have the same concerns or do you hear different challenges from them?
I think a little bit of both, right? So as Sarah mentioned, we have to change the way that we do business, and they know that their, staff needs to change how they do business. But this market's changed pretty quickly. And so getting folks to adapt to how we need to do business in order to be successful is very frustrating for them. It's very challenging. They're trying to get in front of their teams to sort of explain, hey, you need to have a strategy. You need to, work and partner with your wholesalers and, not shotgun things out or make sure that you have the right information. It's really frustrating for them to see sort of the, good enough underwriting that we used to have where, it's sort of easy to do when it's an automatic renewal versus when you need to remarket and you need to sort of re-engage with the clients. And so I hear a lot of frustration that they just can't get in front of their teams to train this sort of change in philosophy and get folks adapting quick enough to be successful. So, it's one of the things I try and do is always talk to their teams about it. I figure I can be helpful to them. Just one more voice, sort of giving the message that we have to go about this business very differently than we have in the past to be successful.
Yeah, it's also really insightful. And you brought something up there that, Diane, I want to pivot back to you for a second. Heather's talking about training, and I know in conversations that we have regularly, you get inundated with calls now about training. Yeah. And it used to be that the carriers were sort of the default trainers of the retail agency force. And just for lots of reasons, a lot of those training programs have gone away. The training resource isn't where it used to be, but PRMA offers a lot of opportunities for training on a lot of these topics that we've hit on already in the first 10 minutes of this webinar. And local chapters also offer a lot of, very localized stuff. You want to hit on a couple of the opportunities that agents have to get educated on what's going on in the marketplace?
Sure. And, as we discussed earlier, it's, we look at the PRMA training in a couple of different aspects, but one of it is making sure, do we fully understand the products and services that are available? So we'll regularly bring forward, just even in 2 weeks, we have just a complete webinar on all the different types of leak detection systems that exist so that you can comfortably explain it to clients. But then we'll get a little bit more detailed. We've run several E&S webinars. We had a lengthy reinsurance webinar. So we'll really vary depending on the, what's happening in the moment and really what our members are requesting. But another big part of this is sometimes you are all going to be faced with a question that you have. And there's only so many times you're going back to your colleagues or your managers to say, I don't even know what to do with this client. So PRMA offers an all-member forum where members can go on and write a question to the membership saying, this is a situation that I have, any suggestions? And all members will get an email in their inbox saying that a question was posed. And it's amazing to see, while yes, you are all competitors, it is people who are working together to find solutions. So it's nice because that's where a lot of the members are learning, is reading the responses that maybe carriers are jumping in on, or just other brokers saying, have you tried this? So I think that's another big component of PRMA is having a place that you can go to. Obviously, you're not sharing client details, but just to go in a direction where in today's times, if you're struggling to find a solution, why not to reach out to people all over the country that are doing what you're doing? And the third piece of it, and a lot of what we're going to start building upon, is we can learn about products and coverages and the challenges that Heather and Sarah just spoke about as well. But when we understand products and coverages, we don't always know how to speak about it in a value standpoint. So from PRMA and using a lot of my background, and what you'll see us doing more of is taking the learning to a next level and really working with our members on how are we now taking what we're learning and putting it in people's terms for the client and focusing more on a value-based selling, because now more than ever, it's so important that while we're being driven by these price discussions, it's not forgetting to go back and really focus on what the client's needs are. As Sarah said, we don't want to overinsure them. So uncover what's most important for them to protect. Saying that is much easier said than done. So it's trying to give the sales skills that will come along with this. So as for those of you that are peer members now, or hopefully those of you that do join us after this, you'll see a lot more coming down the pipeline from us on how to work with you from a sales aspect.
I get the all-member forum in my email first thing every day, and I always look to see what the questions are. And many times I jump right in and say, hey, we can help you with that solution. The conversation that goes on there is great, and agents are helping agents find solutions. So there's a lot of good stuff there. Sarah, as we start looking at solutions, right, and best practices and tips that we can offer agents, it's clear many retail agents are having a great deal of success in this marketplace. There's a lot of opportunity for good agents. Others are not seeing that same level of success. But as you work with agents who are very successful, what are the traits and the behaviors that you observe and how they approach the market to help their clients?
Absolutely. I agree with you, Bill. There are some partners that we have that are having an extreme amount of success, and it's really fun to work with those partners. What they're doing is they're picking a wholesaler and they're being a partner. What that entails is they know their client. In most cases, they've written their client for 20 plus years. They've been to the home. They know the loss history. They could tell you the story. They can advocate for their client. We see some PAF schedules where our agent has been boots on the ground, videotaping the entire home to catalog the schedule for the client. They take risk mitigation seriously. They send us fully completed applications and tell the story for the client. They understand our products. So when they're coming to us, they're letting us know exactly who the client is, what the client means to them, and what they're trying to accomplish with the submission. Whether it's a closing that's happening this week and they need something ASAP, and ASAP is in no way in 30 minutes. They understand our time frame expectations. Or if it's a renewal that's their largest client that may be coming up in January, and we're setting multiple calls because we need to create a strategy on the account, and this is an extremely important individual to their agency and to them personally. Those are the agents and the partners that we want to work with and that we're having a ton of success with. So I would say folks that are representing extremely well-managed individuals and clients that take risk mitigation seriously, but are partnering with the right agents and they're partnering with the right wholesalers. That's where we're having a lot of success.
By the way, we're getting tons of questions. I'm scanning everything that's coming in here. Diane, a lot of questions coming in about PRMA membership and getting signed up for the all-member forum and the local chapters. We'll we'll make sure we cover all that before we get done here today. But already there's a lot of people with many questions. Heather, as we keep talking about agent behavior and best practices, I'm going to give you the harder side of the coin here. And a lot of agents are having a difficult time, and some of it's geographic, but I think we also know that some of it is around behavior and the way that they're bringing clients to the market. What are some, not best practices, but what are some worst practices that you observe that really agents are hindering themselves from being successful, and what are those things that you see that we can call out and help agents avoid?
Yeah, I mean, certainly not being consultative when it comes to the overall insurance process with their client, right? Sort of taking what the client had before, almost utilizing that as though they've taken an order, and now they're potentially sending it over to a wholesaler via an email or, you know, technology, maybe a portal. And, you know, what ends up happening sometimes on the other side is if that person then just takes that order, goes to market, it's very transactional, right? And a lot of times what happens is we haven't actually fulfilled the need that's there, or we have the wrong information. So, you know, when I see folks doing that, you know, you can quickly submit to market by submitting it out quickly to everybody, but you can also quickly get declines from the market when you do that. So you really have to strategize in order to, you know, be successful. And I see it over and over again where folks just haven't taken the time, and they take just what they had and they're sort of passing it forward to try and get sort of a similar result. And that's just not available today. The other thing that I see is I see folks still struggling to explain how great the E&S market is. You know, I still see people sort of acting like it's a penalty or, oh no. I still feel like people don't understand how stable the market is, and they're not, you know, telling that to their client. So, you know, in the last 20 years, there's been 274 financial impairments in the admitted P&C market. And just one of those was surplus lines. All the rest were admitted. So, you know, 274 impairments, only one of them being surplus lines in the last 20 years. So the ability that we have, agents really need to learn how to talk about it and show, hey, we've got great flexibility because we have this additional market as a resource, and really help promote themselves as, look at what we're doing a great thing by shopping what's available for you, and this market is stable. It provides coverage where, you know, it makes sense to provide coverage. It can be very quick to, you know, make price changes when it needs to in order to be stable. And so I still see folks maybe not being able to have that conversation. I see it, you know, really hurting them. So, you know, that's something I think as a marketplace, we just have to get better at explaining why the E&S market is a good solution for their client.
That's a really good point, and I want to get to the surplus lines market here in a second. But before we jump off this, Diane, you also speak to a lot of carriers. PRMA has a lot of carrier partners in there that are in the admitted space, and admitted carriers are writing a lot of business right now. Anything you want to add, maybe from the perspective of what kind of feedback or conversations you're having with carriers in terms of tactics and strategies that agents are employing that are really successful or really unsuccessful today?
Yeah, I think it's similar to what both Heather and Sarah spoke about before, with it's getting all of the necessary information that's needed so that, and I know flexibility we use loosely, but you know, the more that they know of what the client specifically needs or is willing to go higher or lower with, it's making it easier, not a perfect solution, but it's also, you know, with the carriers are finding more success with the brokers that are not scared to have the price discussion. And Heather and I were speaking about this the other day of, Sometimes carriers will get a call where the brokers automatically, they're flipping out about the price. Like, how am I going to explain this 30% increase or 15% increase, whatever it is, before ever going to the client? And they feel the need to have to apologize. But those brokers that don't feel the need to apologize, that could succinctly explain what's happening, are having a lot more success with them. And I made a joke with Heather, but it is true of, if we truly look at the world right now, everything is going up in price. And for me, 2 years ago, I know most of you on the line, if you like to shop at Target, it was a win. Like, if we can walk out of Target and spend less than $100. But now I feel like it's a win if I'm spending less than $300. And clearly, I go there for my regular go-to, whatever, like toothpaste, lotion, and I never look at the price because you need it. You put it in the cart and you go. But last week when I was there, I go to grab lotion that I normally buy, which I thought was like $7.49. And it was almost $18. And I was shocked. But it's not like Target had a sign up that said, sorry, like, there's a lot going on right now in the industry and this lotion significantly jumped in price. But I still bought it because I need it. And it's understandable that brokers right now, we are selling things that are not tangible. It's something we hope that the client never needs. But if we look at insurance, and insurance carriers, companies will say this, we are a risk management business. And at a time when everything is so risky right now, the most important thing is we have to be there at time of claim to make the client whole. But keeping prices where they are, when materials and labor and all of this is increasing, clients have to understand that, why you pay these premiums, you pay them so that when you need it, it's there, especially after a catastrophic event. And I think it's that, the carriers are saying those that are not apologizing for the price to the client seem to be more successful when they can focus on really what's happening. And some of that is just giving is the carriers and organizations like PRMA just providing more education and tools and scripts to allow brokers to do that more comfortably.
Diane, I think you really hit on an important part. Sorry, Bill, jump in, but you talked about education, and I think education and communication are two of the most important things that we have going on right now in this industry. I'm always surprised to hear when, somebody has a really important renewal and the first time they're reaching out to talk to them during this market is because they got a non-renewal, right? And so, you sort of have to segment your clients and sort of say, gosh, I need to be touching base with these guys and explaining what's going on ahead of that particular transaction. And then also sort of explaining, what you're going to be doing for them. That communication of, okay, before I used to market, your program, get you all of this coverage, whether you necessarily needed it or didn't, and then also maybe save you a little bit of money, get you some discounts. Those days are gone. That's not the same communication that you need to be having when you talk about your value. And I think it's hard to talk about your value during that particular transaction when they're sort of in shock of what's going on with their particular policy. So I think we've got to change our process in getting in front of these clients to educate them and communicate them differently, sooner, keeping in touch, and really showing your value as, a true risk management professional in the industry. You're not just there to get quotes, right? You're there to give them risk management advice. And, there might be things that you could prepare them for instance, understand what the requirements of the market is in order to have a roof covered. How many years until, the roof's going to be excluded? And if your client has an older roof, don't go to them 30 days or 60 days when they have the non-renewal and you say, oh, we don't qualify for, the program and we went to the E&S market, now we can't get your roof covered as part of your program. Think about that ahead of time when you're educating them and sort of say, hey, I can foresee this being a problem. We've got to talk about how do you replace this roof before your policy comes up. You're not guaranteeing them that's going to guarantee placement, but what you are guaranteeing them is the ability to mitigate loss, And that's really our jobs, right, as professionals.
Sorry, Bill, I want to jump in here too. Sorry, what Diane said.
Questions and comments are going crazy. So I'm just saying right now, this is part one of a 10-part series we're going to have to put together here to get to everything. But Amos has said, Diane, whatever you're selling, he's buying. So you got one fan out there already. Go ahead, Sarah.
Yeah, Diane mentioned something that's really important, you know, delivering the communication to the client and knowing what's important to them, whether they're rate driven, whether they're coverage driven. Sometimes when we get an account across our desk, either the agent doesn't know what product we might have available for them or what solution we may be able to come up with unless we communicate. So for instance, Tri-County Florida is extremely hard to write in right now. High TIVs, older homes, it's a difficult place. However, if a client's willing to take an X-Win solution, we should be calling them out right away and setting expectations on the market selection, what's going on as far as a geographic perspective, and seeing if they'd be willing to take an X-Wind option, because a lot of times right now they are. Same thing with folks having to go to the California Fair Plan right now. We understand aggregate, capacity, wildfire, those are all major concerns. Folks are having to utilize the Fair Plan more than ever. Can we sell a DIC or a wrap policy? That's going to be our only option, and here's why. So understanding what the client is trying to accomplish and what the agent's trying to accomplish is going to be so important communication-wise. Heather touched on it also. Also, it makes me think about wind deductible buyback coverage. So in these areas where admitted markets may be giving you a 10%, 5% wind hail deductible, you should partner with a wholesaler that may have a supplemental policy like Burns and Wilcox, where we can offer a wind deductible buyback quote for that to either satisfy the mortgage or just, you know, have in hand to offer the client in your back pocket. These are things that, you know, folks come to us all the time and say, you know, I don't know if there's a solution. Well, we need to make sure that we're communicating our products and our ability within those products to offer solutions. So understanding the client's needs and what we're trying to accomplish is so, so important.
I think we're getting a lot of comments and questions from folks around specific solutions related to the E&S market, and that's one of the most obvious solutions going today. The surplus lines market is growing at 16% through the first half of the year. It has hit a record level of $36 billion in premium. So obviously there's a lot of people that are seeing surplus lines as a very viable and only solution in today's marketplace. We've had a couple of comments from agents saying that they understand going to the surplus lines market is the only way to go, but their clients are very hesitant about it when they have to sign, you know, the various state waivers around surplus lines. It scares them a little bit. Heather, how would you best describe to our agents who are obviously having this problem, how do we present surplus lines in a positive light to their clients? What's that conversation look like?
You know, I think first you have to sort of start off with, I did my due diligence, right? I'm not just trying to put you in the surplus lines market to put you in the surplus lines market. You know, we tell our agents all the time, you should not be coming to us if you haven't gotten all your declinations from your admitted marketplace. And, you know, often even that E&S private client marketplace that you might have direct access to, any direct access, you know, non-admitted solution, you should probably be going to first. And then if there's a problem with that solution, you should come to us. Or if you don't get a solution, you should come to us, because then you can really communicate your due diligence. You know, one of the things that we do is we also give a marketing summary when we go through this process. So you're not just getting, you know, one quote and then not understanding, here's the other 5 or 6 markets that weren't willing to take the risk, and here's why. So I think part of the reason that the clients are fearful of it is because they're not even sure if this is the best option for them. So really, I always say it's like showing your work. Remember, like your teachers always said, you got to show your work. You can't just come up with the solution. You got to show your work. Like, we have to show our work. And then we have to talk about the benefits of the E&S marketplace. You know, we've got to explain to them that it's because of the flexibility that they can have when it comes to not be managed by a Department of Insurance, that, they can be flexible with their rate, they can determine what they can and can't cover based on your exposures, that this is why they can provide this coverage, and have them really sort of understand the backbone of why they're in an E&S marketplace and why it's a benefit for them. And then additionally, I think that point that I made earlier, that, there's been a lot of financial impairments by admitted carriers. Very little in the last 20 years. One carrier in the last 20 years that, was financially impaired when it comes to the E&S marketplace. I think that's a really powerful stat. It's something that we should be following. 30% of those, by the way, 274 financially impaired companies were personal lines companies. So, explaining that there is great financial backing and support, and the flexibility that they have is allowing us to create a solution. And even, we're still going out today when there's gaps in the marketplace, when there's not a solution out there, talking to our carrier partners and creating programs, and we can do that quickly and bring them to market quickly. So I always want to talk to my brokers about, what can't they find a solution for? It doesn't mean I'm going to have a magic wand and be able to create it today, but I may be able to put something, Bill, we work together talking to carrier partners all the time about what's missing from the market and what we think could be a benefit to it. And that flexibility just isn't there when it comes to the admitted marketplace. It just takes too long.
Yeah, I think you hit on a good point, that I think there's a bias and misunderstanding in the public that E&S markets are junk carriers. I think we've dispelled that. But we got a question from Pedro out there that I'm going to throw at you, Sarah, that says, is it fair to say that E&S options are, in quotes, less coverage and more premium? Is that a fair statement?
Hi, Pedro. That is not a fair statement. From a rate and coverage perspective, we're always going to offer our best terms to you with our broadest coverage. So I'm thinking right now of a specific product, and it's one that I want to say is a hot item right now. It's PAF, personal article floaters. So we have a few PAF products that are very, very broad coverage. They offer some market appreciation, some in-transit coverage, loss in value, newly acquired items, like some additional broad coverages that are comparable to an admitted market. So say your client may have some loss history. There was a theft. There may be some hair on their profile, but they take risk mitigation seriously. They have a safe, they have CS alarms, things like that. We could potentially place them with one of our exclusive PAF markets. And from a rate and coverage perspective, it's a great policy. So I do think that that is a false narrative going around in the marketplace. We are not here to compete with the admitted market. We're not, we're never going to, okay? But from a rate and coverage perspective in the E&S space, we are definitely a big player. And we, like Heather mentioned with the marketing summary, we do that to add value because we understand that you're having hard conversations daily. So if you're going to offer a $10,000 quote with maybe some additional coverages that weren't as high as the previous policy, and we have 3 other options that are at 40 grand, 50 grand, and 60 grand with less coverage, we're going to let you know that on our end so that you can have a better conversation with the client and show your work. Let them know from a rate and coverage perspective, this is really your best option. Take it and run. But I do think, Bill, to answer Pedro's question, that is a false narrative, and we do have some products out there that from a rate and coverage perspective are great products.
Daniel, there's been a lot of commentary from the audience around the difficulty that the admitted markets are having getting rate approved in a timely manner, getting enough rate approved that they're trying to go for. I'm sure that that's some of the frustration you hear from admitted carriers, and why so many admitted carriers are starting to switch over to surplus lines, because you have that freedom of rate and form. So sitting in your seat talking with carriers, can you give us a little bit of an idea of what the admitted carriers are struggling with in terms of trying to stay viable in the marketplace, but needing to go to the surplus lines paper.
And I think the bigger thing too, there's, when we talk about them not being able to get enough rate, it's that struggle of getting the industry or brokers to understand that they can't possibly charge clients the premium levels. Like if we look at what they're charging now, how much they really have to go after, not even just to bring in a profit, but to be stable after a catastrophic event. And I think that's the biggest struggle, is trying to explain that there's so many other factors that are coming into this from the state that are out of their control. And they can't possibly charge your clients the premiums that they have to even make anything back on it. And that's why we're obviously seeing what we're seeing. I don't think any surprise, but it is consistent. I sat with one carrier for a number of years, and I just thought it was this, whatever I'm seeing at that one carrier was their challenges. But sitting in this seat and having access to a lot of the high net worth carriers, it is consistent across the board. It's not one, it's also not personal to anyone right now that's trying to sell their products. And I think that's the big challenge we're all up against is, it's not that they want to be in this seat either. It's just completely out of their control, and having to make the switch more to the non-admitted space is the best option for most.
Well, we have about 5 minutes left. And there's a couple of more things that I want to hit on before we wrap. First off, Diane, PRMA has a very large event coming up in the next couple of months that we want to give some information to for the audience. All 4 of us will be at the PRMA Summit. I think we need to get a table for the 3 of you to do some Q&A and sign autographs based on the feedback we're getting right now. But do you want to talk a little bit about the summit, Diane, and how this kind of conversation that we've had here goes on for a couple of days and what agents can get from the summit?
Sure. So separate from a PRMA membership, we run once a year a PRMA Summit. And this year it's happening November 5th to the 7th at the Lowe's Chicago O'Hare. I know it doesn't sound like an exotic location, but trust me, on the inside, it's a lot of fun. But as Bill mentioned, it's going to be, it is really education based. We will have our main day will be a keynote speaker, Nicole Malachowski, who is the first female Thunderbird fighter pilot who understands a lot about resiliency. So she will kick off our summit. But on our main day, we have 5 breakout sessions where they're being led by subject matter experts in our industry. The topics, no surprise, we will have a group of reinsurance specialists there talking about not only the bare basics of what you have to know about reinsurance, but how and why would you explain this to a client. We will have an E&S panel that will be similar to this, but we will have someone in from London who will be representing the Lloyd's of London space that will just talk about capacity there and how we really got here. We'll have the intricacies of flood. Again, bare basics, understanding which change in NFIP, how is that different from private flood. We will have another presentation that's focused on the macro trends in our industry. So we'll have a speaker from AM Best that's going to talk about statistically what's happening right now across the country. And it's not just cat-prone states, but what's happening in the center of the states. We're forgetting things about liability and lawsuits that are still happening amidst these catastrophes. And then we will also be focusing that presentation on, now that you know this, how do we train our brokers? Similar to what Heather said before, is now that the client's role has to change, we have to educate them on that. And then we'll have another session on wealth transfer vehicles. And there will be 2 CEO panels that will also happen. So there'll be 6 different CEOs that will be speaking on what we're calling, so PRMA has this Risk Ready podcast that's been pretty successful. So we're gonna do that live on stage, and you'll hear from the presidents of Private Client Select and Chubb and Pure and some of our other carriers, and we'll be asking them just thought-provoking questions on where they see the industry going. But to me, the final day of the summit brings this all full circle. So while we can stay up here and say, yes, you will learn about reinsurance and E&S, and we have to do this, and you have to say that, the last day of the summit will be workshops. And the goal in these workshops are, you're going to get client scenarios, you'll get cheat sheets to build, and it'll be all hands-on where you can take what you've learned the day before and leave that with the script. You know, similar to Sarah handling Pedro's question, it's, you know, what could we give him in a single sentence that when he walks out of that summit, he feels like he can use it immediately with clients. So it is a jam-packed 3 days. We'll have a lot of fun other things in there. We're doing a headshot lounge, parties, red carpet event, black tie awards dinner. So please join us. You can visit, there'll be an email after this. We are filling up.
And Diane, you are making an offer specifically to the folks watching this webinar today, a discount for registering for the summit, correct?
It's actually
Want to quickly
switched
go over that?
for
Or
membership.
membership.
Yes. So Bill brings up a good point. So we have an early bird rate that's running right now until August 25th for the PRMA Summit. If you want to check out, and there'll be an email after, if you visit the prmasummit.org webpage, you can find out everything I just explained to you. But in addition, PRMA, like I said, runs all year, separate from the summit. And for those of you that do not have a membership, we wanted to make an offer to everyone that's on this line of, if you want all year round access to the all member forum, to the membership sites, to all of the educational topics that have been done, recorded, or podcasts, you'll get a code in the email that goes out after for you to set up your individual membership with us. There's also an About Us page, so if you want to reach out, or my email's on the screen, I'm more than happy to do a PRMA open house with you and walk you through not only the summit, but setting up membership as well.
Diane,
yes.
we are completely out of time, but a couple of quick things for some questions that were asked. A link for this webinar will be posted so that some people have asked if they want to come back and watch it again or show it to their staff. So a replay will be available. Also, we will be emailing out information to everyone that attended about the PRMA membership discount that's available. And to the three of you, I just want to say thank you very much. Very insightful, very helpful. There's 10,000 things we didn't get to that we're going to have to get to next time. But thank you guys very much for your time. And thank everybody for joining us.
Thank you for having me.
Thank you.